Good morning, students. Welcome you all once again in the revisionary classes organized by Board of Studies of ICAI. Today, students, we will be covering two standards, Ind AS 2 and Ind AS 41. Ind AS 2, it's a small asset-based standard. Ind AS 41 is again a small asset-based standard which deals with agriculture. So in the first 90 minutes, we will be covering Ind AS 2, and in the next 90 minutes, we will be covering Ind AS 41 with the help of some questions. And I'll just set the context for the next 5-10 minutes, and then I'll discuss some comprehensive questions shared by Board of Studies of ICAI. Students, this standard talks about inventory. Okay. And which inventory? This standard talks about all the inventory except if in a construction contract, work in progress, which is again an inventory, if it is covered by Ind AS 115, financial instrument, which is covered by Ind AS 32 and 109, agriculture inventory, which is covered by Ind AS 41, right? So all these inventories which are covered by specific standard is not covered by Ind AS 2. Otherwise, all the inventories are covered by Ind AS 2. What is the definition of inventory? A company which is into IT business, and that company is selling a car. Why? That company has purchased a car for their director. Okay. Now they are selling the car because the director wants to buy a new car. Okay. So the old car company wants to sell. So whether that car is an inventory for that company? Whether that car is an inventory for that company?
No, sir.
Why no?
Because company does not deal in it.
So because it is not the bread and butter of the company is not selling the car in the ordinary course of business, right? So the basic condition is it has to be sold, it has to be held for sale in the ordinary course of business, okay? So inventories are those assets which are held for sale in the ordinary course of business, okay? In the process of production for such sale in the form of material or supplies to be consumed in the production process or in the rendering of services. Inventories are assets which are held for sale in the ordinary course of business. Finished goods, okay? In the process of production or for such sale, work in progress. In the form of material or supplies to be consumed, raw material, right? So all these items are covered under inventories. Finished goods, work in progress, raw material, right? Yes. So friends, inventory may include intangible assets that are being produced for the resale. For SAP is a company. So SAPs are selling SAP software. So what is the nature of SAP software for that company? That is an inventory because it is held for sale in the ordinary course of business, right? For Microsoft, all these, this MS Word, MS Doc, right? This MS Office, Microsoft Office. So what is the nature of Microsoft Office in the books of Microsoft? It's an inventory. It's an inventory, right? So inventory also includes properties that have been purchased or are being developed for resale in the ordinary course of business. DLF. For DLF, the flats, land. What is the nature of these flats and land in the books of DLF? Inventory. It is again an inventory. Okay. Spare parts, standby equipment, servicing equipment, right? These are classified as inventory only if they are expected to be used, right? Except if they are expected to be used for more than one period, right? And is covered under the definition of PPE. So spare parts, standby equipment, servicing equipment, all these items are considered as an inventory, right? If the spare parts, standby equipment, and servicing equipment is classified as a PPE, then it is not an inventory. Reusable and returnable packaging or parts that are sold to customer but will return to the seller are not the inventory. Have you seen the carrot in which the cold drink bottles are there. Have you seen the carrot? The box in which
Yes,
the
sir.
cold drink bottles are there, the
Yes,
plastic
sir.
box. Have you seen that?
Yes, sir.
So those items which are reusable and returnable, right? Even if it is sold to customer, but it is returned from the customer. Like you must have seen the cold drink bottle, right? So you are drinking a cold drink from the bottle and you are returning the bottle to the shopkeeper. Okay, I'm talking about the glass bottle. So if the item which are reusable and returnable, these are not classified as inventory, but something which is not reusable and returnable, it has to be classified as an inventory. For example, primary packaging material. You must have seen Amul full cream milk, Amul milk. So the primary packaging material, which is the plastic in which that milk is stored, right? So that primary packaging material is considered as an inventory. But if there is a secondary packaging material, which is just like that carrot, that carton, right? That box in which those plastic bags, those plastic bags of milk are stored. So those secondary packaging material are not inventory, but primary packaging materials are inventory. Okay. Measurement, friends, inventory standard is pretty simple. It is just like accounting standard too. Inventories shall be measured at lower of cost and net realizable value. So cost, which is your cost of production, cost of purchase, cost of conversion. Okay. So inventory has to be measured at lower of cost and net realizable value. So whatever is your cost, for example, the cost of inventory is 100 per unit and net realizable value. Now, what is the meaning of net realizable value? Net realizable value is estimated selling price minus estimated cost of completion minus estimated selling cost is equal to net realizable value. What is the meaning of cost? Cost includes cost of purchase of raw material, for example, cost of conversion, converting that raw material into the finished goods, other costs incurred in bringing the inventories to their present location and condition, right? So directly attributable cost, which is necessary to bringing the inventory to their present location and condition. Wine, there is a long gestation period of wine, right? And the oldest wine has a larger value. The oldest wine has a larger value. Okay. So friends, if a company is having a storage facility, warehouse facility or a storage facility where such wine is stored for years, okay, so that warehousing cost, that storage cost is also considered as a directly attributable cost of inventory, okay, because that storage is necessary to bringing the inventory into their present location and condition to become it sellable, right? For example, ice cream. The ice cream will be, the ice cream will be, will come into the sellable condition when it has to be freezed in a very less temperature. For example, -2 degrees Celsius, -1 degree Celsius, -5 degrees Celsius. That freezing cost, that freezer cost is also become part of the cost of the inventory. Okay. So cost of purchase, always remember, purchase cost include the purchase price, transport and handling cost, taxes, which are not recoverable. You remember we discussed this aspect also in PP, intangible asset, that non-refundable taxes. If the taxes are non-refundable, non-creditable, it becomes part of the cost of the asset. And other costs directly attributable to the purchase. If inventory is purchased at a deferred payment terms, so Abrakesh, tell me quickly, this deferred payment concept, where we have read this deferred payment concept. We have covered this deferred payment concept in two standards. Which are those two standards? Yeah, Abrakesh. Anyone who can help me? In which two standard we have covered the concept of deferred payment terms? In Ind AS 16, property, plant and equipment, and Ind AS 38, intangible assets. And Ind AS 38, intangible asset. Okay. Right. So if inventory is also purchased for a deferred payment term, means beyond the normal credit term, then whatever extra money which is getting paid, right? Which is getting paid, that is a part of an interest. That is a part of interest. Okay. Discount and rebate on purchases. The trade discount and volume discount are deducted from the cost of purchases. Cost of conversion or production. So we discussed cost of purchase. Now what is cost of production or conversion? So cost of production or conversion includes all direct costs such as labor, material, direct overheads, and an allocation of fixed and variable production overhead also, right? For example, depreciation and maintenance of factory building and equipment, amortization of intangible assets such as software used in the production process, right? The cost of the factory management and administration. So these are the allocated cost. Okay. Now, how the fixed overheads are allocated. For example, there is a rent of the factory in which the production is going on. The rent is 1 lakh rupee. The rent is 1 lakh rupee. Okay. So Priyanka, I'm asking you, let's say the fixed overhead, the rent is 1 lakh rupee, right?
Sir.
So, yes.
Yes, sir.
Yeah. So I'm asking a question and this question goes to you. The rent of the factory is 1 lakh rupee. Okay.
Okay.
And the normal production capacity of that factory is 10,000 unit per month. So what is the per unit cost of rent which is allocated to the inventory?
10.
10 rupees. 1 lakh
Yes.
rupee of fixed overhead divided by normal
10.
production capacity.
10,000.
10
Yeah.
rupees,
Sir.
right? So now the second question. So the normal production capacity is 10,000 unit. But the company has produced only 5,000 unit during the month. And the normal production capacity is 10,000 unit per month. So what is the fixed overhead allocation to this inventory per unit? What is the per unit cost on the basis of normal production capacity?
Is 10 rupees.
10 rupees per unit. What is the actual production held?
5,000.
5,000. So 5,000 multiplied by 10 comes out to
50,000.
50,000. So 10 rupees per unit will be allocated only. 50,000 rupees will be charged to the inventory, will be capitalized to the inventory, and the balance 50,000 will go to
P&L.
P&L immediately. So whenever there is an inefficiency, so why this actual production is lower than the budgeted or normal production? Because of the inefficiency, because of the decline in demand, right? So standard says that any inefficiency should be recognized in P&L immediately as another expense. Question number 3. So we discussed when your actual production is equal to normal production, which is 10,000 unit. When your actual production is lower than normal production, so the per unit fixed overhead should be as per the normal production, and then it is charged to the actual production. Okay. And the balance amount, which is like an inefficiency, abnormal loss, has to be charged to P&L. Okay. Third question. The actual production is 20,000 per unit. Normal production capacity is 10,000 rupees per unit. So what is the amount of fixed overhead which is capitalized to the inventory?
1 lakh.
1 lakh, okay. And what is the fixed overhead per unit which is allocated to the inventory? On the basis of normal capacity, it is 10 rupees per unit. So will you capitalize 10 rupees per unit in this case when the actual production is 20,000 unit?
5 rupees, sir.
5 rupees. Because if you will allocate 10 rupees per unit, what is your total cost? What is your total amount? 20,000 multiplied by 10.
2 lakhs.
2 lakh
2
rupees.
lakhs.
But
2
what is the
lakhs.
fixed overhead? Fixed production overhead is 1 lakh. So the actual fixed production overhead is 1 lakh. So you cannot allocate more than 1 lakh rupees. And that is why 5 rupees per unit will be allocated to the inventory, right? 5 rupees per unit production, fixed production overhead is allocated to the inventory. So always remember, please write down, when actual production is equal to normal production capacity, then your fixed overhead divide by normal production. Then allocation of fixed overhead is equal to fixed overhead divided by normal production. Number two, when actual production is lower than the normal production, how this fixed overhead will be allocated? Fixed overhead will be allocated on the basis of normal production, which is fixed overhead divided by normal production per normal production capacity. So which comes out at 10 rupees per unit, and this per unit multiplied by actual production. Third, when actual production is greater than the normal production, then fixed overhead is allocated on the basis of actual production. So fixed production overhead divided by actual production. Okay. This is, the example which was given. So abnormal amount of waste material, labor or other production overhead is charged to P&L, right? If there is any abnormal amount, for example, the COVID came and the inventory was obsolete, damaged, inventory was, there was a perishable product, and inventory was, the inventory was completely lost. So all this abnormal amount of waste material, labor, production overhead has to be charged to P&L. Storage cost. So you just produce the inventory, you produce television, and you kept those television into the warehouse. So those storage cost is not charged to the inventory. Those storage cost will be charged to P&L. So storage cost, unless those costs are necessary in the production process before a further production stage, right? So if the storage cost is necessary to bringing the inventory into the location and condition of the sale, then the storage cost becomes part of the cost of the inventory, otherwise not. For example, in case of a wine, in case of ice cream, administrative overhead, selling costs, these are charged to the P&L, and these are not part of the cost of the inventories. Okay, these are the exclusions. Then friends, an important concept of joint product and byproduct. Okay, so you are extracting a petrol, right? When you are extracting a fuel, you are extracting a petrol. While extracting a petrol, you got the diesel also. You got the diesel. And then you got the kerosene also, right? So this petrol and diesel, petrol is 95 rupees per liter, diesel is almost 85, 86 rupees per liter. This petrol and diesel are the joint product. When you are producing one thing, you got the second item also. So these are the joint product. These are known as a joint product, right? So when more than one product is produced, so either it could be a joint product or it could be a byproduct. What is the difference between a joint product and a byproduct? So let me tell you. Normally the byproduct, like kerosene, so byproduct is comparatively much cheaper than the joint product. Okay. So if the outcome is joint product, two products have emerged, two products are produced. So how the joint products are going to be measured, how the cost of the inventory, cost of the joint products is going to be measured. Standard says that when the cost of conversion is separately identifiable, this is the cost of extracting petrol, this is the cost of extracting diesel. So if the cost is separately identifiable, then of course, cost of each product is based on the separate cost identified, separate cost incurred. But what happened when the cost of conversion is not separately identifiable? Then standard says that allocation is based on the relative sales value of each product, either at the stage in the production process when the product becomes separately identifiable or at the completion of production. For example, the total cost of extracting petrol and diesel comes out at rupees 10 lakh. Okay. And the sales price of petrol is 100 rupees per unit. Sales price of diesel is 80 rupees per unit. And the total petrol which was extracted is let's say 5,000 liter. 1 lakh liter. And what is the cost? The cost is what is the sale value? Sale price is 100 rupees per liter. 1 lakh liter total. So what is the total sales value of that petrol? 1 lakh multiplied by 100. One lakh multiplied by 100.
10 lakhs.
1 crore.
1 crore. 1 crore. So friends, just allow me a second. Yes. So total sales price of the petrol, sales value of the petrol is 1 lakh multiplied by 100, 1 crore. The total diesel which is extracted is 50,000 unit. And the sales price of the diesel is 80 rupees per unit. So what is the total value of the diesel? 50,000 multiplied by 80.
40 lakhs.
40 lakh. So 1 crore is the value of the petrol, sales value of the petrol. 40 lakh is the sales value of the diesel. And what is the total cost which is incurred? 10 lakh. 10 lakh. So this 10 lakh has to be allocated in the ratio of 1 crore is to 40 lakh, right? And that cost, allocated cost will become the cost of the joint product, petrol and diesel. Is that clear? What happens if the outcome is main product? Sorry, the outcome is byproduct. Okay. So the petrol has come, and with petrol, a kerosene has also come. And the value of the kerosene is, let's say, 10 rupees per liter. Okay. So if the byproduct is immaterial, then whatever is the selling price of the byproduct, net realizable value of the byproduct, that has to be reduced from the cost of the main product. That has to be reduced from the cost of conversion of the main product. But what happens when the byproduct is material? When the byproduct has a material value, byproduct is significant, then the byproduct will be treated as a joint product. Okay. And the accounting has to happen as per this rule. Okay. Right. So cost formula, if the goods are separately identified, specific identification is there. So the cost will be, the specific value of those individual items. Okay. The specific cost has to be there. If there is no specific identification, means, for example, in case of jewelry, right? So the jeweler has a lot of jewelry. For example, necklace, they have, let's say, 100 necklace. So they know the price of the every necklace. So they keep the inventory of necklace on an item by item basis. Okay. Some necklace have a higher making charges. Some necklace have a lower making charges, right? some has some different values. So all these necklaces have an individual cost associated with it. But in a large showroom or in a large, I would say, mega mart, like Big Bazaar, Reliance Fresh, D-Mart, let's say there are 100 packets of Maggie, right? And they have sold 10 packet of Maggie. Will they be able to identify that they have sold the Maggie out of which lot? For example, they purchased Maggie in 3 lot, right? So 20 Maggie packets on, let's say, 15th of April, 30 Maggie packets on 25th of April, and the remaining 50 Maggie packets on 30th of April. There are 100 Maggie packets which they have purchased during the 3 slots, into the 3 lots. And on 5th May, they have sold 25 packets of Maggie. So will the shopkeeper be able to identify that these 25 packets are from which lot? Yeah. Will he be able to identify? Of course, no, na?
No.
Of course, no. So if there is no specific identification, then which method, then which cost formula will be there? FIFO and weighted average cost formula. First in, first out. He will assume whatever was the first lot that has been sold out. Okay, first in, first out, or weighted average cost formula. Weighted average cost formula. Okay. LIFO, whether LIFO is permitted, LIFO is prohibited under Ind AS, right? An entity shall use the same cost formula for all inventories having a similar nature and use to the entity. Okay. For inventories with a different nature or use, different cost formulas can be justified. For example, the entity is selling the perishable product and the non-perishable product. Okay. So there could be 2 different cost formula for a perishable product and the non-perishable product. Okay. For the perishable product, they can apply FIFO method. For non-perishable product, they can apply weighted average cost formula. Right? So cost formula we discussed. NRV we discussed. Net realizable value is equal to estimated selling price minus estimated cost of completion minus selling cost. It is NRV. Inventory has to be measured at NRV or cost, whichever is lower. Cost or NRV, whichever is lower. Right? So for the work in progress and for the finished goods, work in progress and the finished goods, inventory has to be measured at cost or NRV, whichever is lower. What about the raw material? What about the raw material? Friends, for raw material, you need to check if the finished goods are sold at or above cost. Let's say the cost of the raw material for manufacturing a television is 10,000 rupees. And the television is sold at 10,000 rupees or more, then the raw material is measured at cost. When finished goods are sold at NRV, right? When finished goods are sold at NRV means, for example, the cost of finished goods has gone down. For example, a TV, the cost of the TV has also gone down, which is below cost, which is net realizable value. So in that case, raw material is measured at replacement cost, measured as NRV. Okay. So raw material is measured at replacement cost. Okay. So if inventory is measured, if the finished goods are sold at or above cost, then raw material is measured at cost. But if the finished goods are sold at net realizable value, then raw material is measured at replacement cost. Okay. So disclosures I'm not going through. This was the overall revision of inventory. Friends, now we will discuss the inventory standard with the help of some important questions. Okay. So quickly we have revised the inventory standard. Now let's go to the question number 1. I hope this file is visible to all of you. I hope this file is visible to all of you.
Yes, sir.
Yes. Opening inventory finished goods is 1000 kg. This is amount. This is amount in rupees. Opening inventory finished goods 1000 kg. Amount is 25,000 rupees. Raw material 1100 kg. Amount is 11,000 rupees. So what is the per unit cost of inventory? 25 rupees. And this is 10 rupees. Purchases. During the year, the purchases are 10,000 units, which is at the rate of 10 rupees per unit. Labor cost is 76,500. Other fixed overhead is 75,000 rupees. Sales, 10,000 quantities sold. So 1,000 was the opening inventory. 1,100 was the raw material. 10,000 is the purchases. Sales is 10,000. Total sale price is 2,80,000. Closing inventory, raw material is 900 unit. Okay. And the finished goods is 1,200 unit. The expected production for the year was 15,000 kg of the finished product. Due to fall in market demand, the expected production for the year was 15,000 kg of the finished goods. Due to fall in market demand, the sale price of the finished goods was rupees 20 per kg and the replacement cost for the raw material was 9.5 per kg on the closing day. Calculate the closing inventory as on that date. Whether question is clear? Question समझ आया या नहीं आया?
Yes, sir.
आपको ओपनिंग इन्वेंट्री दी हुई है. The opening inventory finished goods is there, raw material is there, right? So 1,000 unit of finished goods was there in the opening. Okay. And now the finished goods is 1,200. Okay. There was a sale of 10,000 unit also. What does it mean?
Reduction in inventory.
So 1,000 unit of finished goods was there. 1,100 units of raw material was there. Okay. So this raw material were also used in the production. 10,000 unit of purchases are there. These were also used in the production, right? And there was a 10,000 unit of sales. Closing stock of the finished goods is 1,200 unit. Raw material is 900 unit. Okay. So these are the information which is given. The expected production, the normal production, budgeted production is 15,000 per unit. Okay. 15,000 kg of the finished product. 15,000 unit. Due to fall in market demand, the sale price of the finished goods was 20 rupees per kg. It becomes 20 rupees per kg. And the replacement cost of the raw material was 9.5 rupees per kg. Calculate the closing inventory as on that date. Okay. So we need to calculate the closing inventory as on that date. Okay. So first of all, what do we need to do? First of all, we need to compute the cost of the closing inventory. We need to compute the cost of the closing inventory, right? So what is my cost of purchases? What is my cost of purchase? What is my cost of purchase?
1 lakh rupees.
1 lakh
Rupees.
So my
10,000 kg, 1 lakh rupees.
10,000 kg, 1 lakh rupees. Okay. So purchases is given at 10,000 unit. Okay. Into 10, which is 1 lakh rupee. Okay. So basically this is my cost of purchases. But what would have been the raw material value? What would have been the raw material value? The opening raw material was 1,100 unit. Right? The closing The closing raw material is 900 unit. So what was the raw material which was consumed? What was the value of the
200.
sorry?
10,200.
10,000. And how have you computed?
10,200.
How have you computed this 10,200?
Opening plus purchase minus closing.
Opening plus purchase minus closing. Opening was 1100 plus purchase 10,000 minus closing 900. So 10,200 is the consumption of the inventory, is the cost of purchase. Okay, ये clear है या नहीं है?
Clear in mind, sir.
Clear in mind? Abrikesh, Ravi, Salesh.
Same, sir.
Yeah,
Yes.
because you need to compute what is my cost of inventory, and your cost of inventory, your cost of final product comes out at what is the consumption of raw material, work in progress, cost of conversion. So these all are the culmination of the final product. Okay. So 10,200 is the unit, number of unit which we have computed. And what is the price per unit of the finished goods? Sorry, raw material. Price per unit is 10 rupees ना? Purchase भी 10 rupees पे हुआ है और आपका opening भी 10 rupees पे था. 10 rupees is the price.
Yes,
So
sir.
10,200 multiplied by 10. What is your cost of purchase? 1,02,000. Now, what is your direct labor cost? So ये clear है, purchases, cost of purchase. What is the direct labor cost?
76,500.
Cost of conversion. Fixed overhead. Your fixed
75,000.
overhead is 75,000. So whether this entire fixed overhead will become the cost of the inventory?
No, sir.
So what is the production? What was the normal production? What was the budgeted production?
15,000.
15,000.
The budgeted production was 15,000 kg. What is the actual production happened?
10,200 units.
10,200. वो 10,200 ही actual production हुआ है ना? Opening और closing raw material जो बच गया, जो closing में बचा, उसको छोड़ दो तो बाकी सारा produce हो गया. So 10,200 unit is the actual production. So what is my fixed overhead per unit? 75,000 divided by 15,000. So what is my allocated fixed overhead?
5 rupees.
5 rupees per unit. So what is my total fixed overhead which has to charge to the inventory? 10,200 multiplied by 5.
51,000.
51,000. Right? So your purchases, your labor, your overhead is over. Right? These three costs are over. Now what is the total cost of inventory? What is the total cost of inventory now? So all the costs we have done. Your total cost of inventory is 1,02,000, 76,500 and 51,000. Your total cost of production, cost of inventory is 229,500. Now what is the cost of closing inventory? What is the cost per unit? What is the per unit cost? Your per unit cost is 22 rupees 50 paisa. Your cost of closing inventory is 22 rupees 50 paisa. What is your net realizable value? It is given that due to the fall in the demand, the NRV becomes 20 rupees per kg. And the replacement cost of raw material becomes 9.5 rupees per kg. Okay. So this NRV is lower than the cost, right? Since NRV is lower than the cost, the closing inventory price, at what value inventory will be measured? Cost or NRV, whichever is lower. So since NRV is lower than the cost, so inventory has to be measured at NRV. So therefore, what is my closing inventory? 1,200 multiplied by 20, 24,000. And at what value, if the finished goods are measured at NRV, at what value raw material is going to be measured?
Replacement cost.
Replacement cost. You are right, Ravi, replacement cost. And what is the replacement cost in this question?
9.5.
9.5.
9.5. While the cost is 10 rupee, you remember, we have seen that the cost is 10 rupee, but replacement cost is 9.5, and hence raw material inventory has to be measured at 9.5. Okay. Finished goods has to be measured at 20 rupees, which is NRV, and raw material has to be measured at replacement cost. Is this question clear to everyone?
Yes, sir.
सर अनम्यूट कीजिए सर.
Sir, please unmute, sir.
Sir, unmute कीजिए.
Oh, I'm so sorry. I'm so sorry. Yes, on 31st March 20X1, the inventory of ABC includes spare parts, which it had been supplying to a number of different customers for some years. The cost of the spare part was rupees 10 million. 10 million means 1 crore. And based on retail prices at 31st March 20X1, the expected selling price of the spare part is 12 million. So cost is 10 million and expected selling price, not NRV. Expected selling price is 12 million. What is the formula of the NRV? Net realizable value?
Selling price minus expected cost that is to be incurred to make the sell.
Estimated selling price minus estimated cost of completion minus estimated selling cost. This is the formula of net realizable value. So in this question, the cost of the spare part is given and the selling price is also given, right? If the question is silent about the estimated cost of completion and estimated selling cost, then what will be the NRV? And only selling price is given.
Only selling price.
Only selling price will become NRV. Okay. The cost is 10 million and the expected selling price is 12 million, which is higher than the cost. On 15th April 20X1, due to market fluctuations on 15th April, this is talking about what? Subsequent event, post balance sheet event. Okay. On 15th April 20X1, due to market fluctuations, expected selling price of the spare parts in stock is reduced to 8 million. Right? What happened after 15 days? Due to the market fluctuation, the expected selling price has gone down. From 12 million, it has gone down to 8 million, which is below than cost. The estimated selling expense. So, uppercase, the estimated selling expense is also given. The estimated selling expense required to make the sales would 0.5 million, and the financial statements were approved by the board of directors on 20th April 20X. As at 31st March 20X2, directors noted that such inventory is still unsold and lying in the warehouse of the company. Okay. So first it was talking about 31st March 20x1. It was talking about this date, and now it is talking about 31st March 20x2. Okay. Directors noted that such inventory is still unsold and lying in the warehouse of the company. Directors believe that inventory is in a sellable condition and active marketing would result in an immediate sale. Okay. Since the market conditions have improved, estimated selling price of inventory is 11 million and estimated selling expense are same 0.5 million. Determine the value of the inventory at the following dates. What is the value of the inventory on 31st March 20x1 and what is the value of the inventory on 31st March 20x2? Tell me, what will be the value on 31st March x1 and x2? You have the cost, you have the selling price. Then you have the post balance sheet on 15th April. You have the selling price, which becomes 8 million. Selling expenses are 0.5 million, right? And on 31st March 20x2, this price has gone up. The inventory was still unsold. The price has gone up, and the still, selling expenses are 0.5 million. So what is the value of inventory on 31st March 1 and 2? क्या होगी value?
On one, it will be 7.5.
But it is a post balance sheet event.
So we will recognize that.
So you are saying it will be adjusting event, right?
Yes, sir.
Okay. Anyone else who have a different view? Friends, inventory has to be measured at cost or NRV, whichever is lower at the reporting date, right? Post balance sheet, which is 31st March, after 31st March, the inventory in this case was how much? What was the amount of inventory? 8 million. Okay. And the selling expenses is 0.5 million. This is 7.5 million. Okay. So the decline in the value of the post balance sheet event will be treated as an adjusting event, right? And the estimated selling price will be computed as 7.5 million. So accordingly, closing inventory value will be 7.5 million. The cost is 10 million. So this 2.5 million would be recorded as in what? 2.5 million would be recorded in statement of profit, right?
Statement.
Impairment loss on inventory, and it has been recorded in profit and loss. Now, on 31st March 2002, it has gone up to 10 million. 10 million tha na value, 11 tha, 10 tha. 11 million. And the selling expenses is 0.5 million. So what is the NRV?
NRV is 10.5.
NRV is
10.5.
NRV is 10.5. Okay. And what was the cost?
10.
10. So now cost or NRV, whichever is lower. What is lower?
Cost is lower.
So my value of inventory is 7.5. Cost is 10. Cost is 10. So I will reverse the impairment loss on this inventory by how much amount? 2.5 or 3?
2.5.
2.5. Okay. So in 2002, 2.5 million, there is an impairment loss reversal. Okay. There is an impairment loss reversal. So as per Ind AS 2 inventory is measured at lower of cost or NRV. Further, as per Ind AS 10, events after balance sheet date, decline in NRV below cost, provide additional evidence of events occurring at balance sheet date and hence shall be considered as an interesting event. In the given case, for valuation of inventory as on 31st March 1, cost of inventory would be 10 million, NRV will be 7.5 million. Accordingly, inventory has to be measured at 7.5 million and impairment loss has to be booked in the P&L for 2.5 million. Okay. In 2002, as per para number 33 of Ind AS 2, which you are not required to write, A new assessment is made of NRV in each subsequent period. It is inter alia state that if there is an increase in NRV because of the changed economic circumstances, the amount of write down is reversed so that new carrying amount is the lower of cost in NRV. Okay. Accordingly, on 31st March 2, again inventory would be valued at cost or NRV, whichever is lower. In the present case, cost is 10 million, NRV is 10.5 million. So what is lower? And cost is lower. Accordingly, inventory would be recorded at 10 million and inventory write down carried out in previous year for 2.5 million will be reversed. Okay. Is that clear? Completely clear? Now coming to question number 3. Question number 3. The following information is gathered from an entity. Full capacity is 10,000 labor hours in a year. Full capacity. Normal capacity is 7,500 hours, 7,500 labor hours in a year. Actual labor hours for current period is 6,500 hours. So full capacity is 10,000, right? So if you want to run a car, what is the maximum speed in which you can run a car? (200 kilometers per hour, for example. But what is the normal? What is the normal limit of the car? Which you see on the roads. And you know, in nowadays, there is an alarm in the car. When you cross 80, when you cross 100, the alarm starts beeping. Yes or no? Have you seen that?
Yes, sir.
So normal capacity is 7,500 labor hours. Actual labor hour for current period are 6,500. Total fixed production overhead is 1,500. Variable production overhead is 2,600. Tell me answer of a question. So whether fixed production overhead, whether fixed overhead per unit is fixed or variable overhead per unit is fixed.
Fixed overhead per unit is fixed and variable otherwise reverse.
I am asking unit. Whether per unit price of variable overhead
Yes, then fixed is variable. Per unit is variable.
per unit in fixed overhead per unit will becomes variable. But in variable overhead per unit become fixed. For example, when you are producing. So yesterday, I had to deinstall my 4 air condition. I had to deinstall, right? So I told the technician, I asked the technician that I want to deinstall my air condition. I asked, what is the price? He told me the price is 300 rupees per unit of air condition deinstallation. Right? I deinstalled 4 air condition. So how much price I have paid?
1200.
1,200. So this is a variable overhead. This was my variable overhead. Okay. And this variable overhead keeps on varying. In totality, it keeps on varying, but per unit will always be fixed. Right? If I would have deinstalled 2 air condition, I would have paid 600, 3 900, 4 1,200, 6 1,800. Okay. But fixed production per unit will not fixed. For example, I am paying a rent of 30,000 rupees per month. Okay. If I produce 10,000 unit, my per unit will be different. If I'll produce 50,000 unit, per unit will be different. So variable overhead per unit will always be fixed, but not necessarily fixed production overhead per unit. Okay, not necessarily. So total fixed production overhead is given. Total variable production overhead is also given. Opening inventory is also given, 2500 units. The unit produced in a year are 6500 units. So opening inventory is given, unit produced is given. Total units sold in a year are 6700 units. The cost of inventory is assigned by using FIFO formula. FIFO, first in, first out. Determine the overhead cost to be allocated to cost of goods sold and closing inventory. Right? And the closing inventory. Whether question is clear to everyone? क्या क्वेश्चन क्लियर है सबको?
Yes, sir.
क्वेश्चन में क्या पूछा है? What is the ask in the question? What is the ask of the question? The question is asking the overhead cost to be allocated to cost of goods sold and closing inventory. And closing inventory. Right? And closing inventory. Friends, what is my fixed production overhead? What is my fixed production overhead?
1500.
1500. What is my normal capacity?
10,000.
7500.
10,000 is the full capacity. Normal capacity is 7,000.
7,500.
So what is my fixed production overhead per unit?
20 paise.
20 paisa. 1500 divided by 7500. Okay. So my fixed production overhead is 20 paisa. It is 20 paisa. And what is my production? What is my production? Actual labor hour for current period is 6500 hours. Okay. Actual labor hours is 6500 hours. What is my total production? What was my total opening inventory?
2,500.
How much is the unit produced?
6500.
6500. How much is my unit sold?
6700.
So opening is given, produced is given,
Closing is
not
2000.
purchased, produced is given, and closing is also and sold is also given. So what is the balance?
2300.
2300 is what?
Closing stock.
Closing units.
So closing stock is given. Okay. So now my total, my actual labor hour for current period is 6500 hours. And what is my actual unit produced? 6500 units. It means one unit is equal to one labor hour, right? So one labor hour is required to produce one unit. Okay. So what is the ask of the question? The question is asking, what is the overhead cost to be allocated to the cost of goods sold? What is the overhead cost allocated? So what is the overhead cost which is going to be allocated? What is the actual production?
Actual production is 6500 units.
What is the per unit cost?
60 paise.
6 per unit cost is fixed overhead per unit is how much?
20.
Fixed is 20 paise.
20 paisa. So 6500 multiplied by 20 comes out at 1300. Right. Where the remaining 200 will go? Where the remaining 200 will go?
PNL.
PNL. It will be recognized in PNL. Okay. And what is my variable production overhead?
40 paise.
Hey, how have you arrived at 40 paisa? What is my variable production overhead? It is 2600.
Yes, 2600 per unit.
Divide by what? Divide by
6500.
6,000.
6500. My unit produced, right? So variable production overhead divided by actual hours for current period, which is 6500 hours. So 40 paisa per hour, 40 paisa. So my variable production overhead is 40 paisa. Okay. So variable production overhead is 40 paisa, which is equivalent to 6,500 multiplied by 40, 2,600. So what is my total cost? Variable plus fixed?
60 paisa.
60 paisa.
Total
6,500 multiplied by 60 paisa, which is equivalent to 1,300 plus 2,600, 3,900, right? 3,900. Okay. So this was the cost of goods sold. Now coming at the closing inventory. What is the value of the closing inventory?
1,300.
2,300. 2,300. So what is the value of the closing inventory? So 2,300 is the unit. What is the amount? What is the amount?
1,380. But
How have you arrived at 1,380?
2,300 into 60 paisa.
2,3?
2,300 is our closing stock units, closing inventory into 60 paisa.
Yes. So let's discuss this question now, step by step. What is my hours taken to produce one unit? 6,500 hours labor hour divided by 6,500 unit produced, 1 hour per unit. What is the overhead absorption rate? Fixed production overhead divided by labor hours for normal capacity, 20 paisa per hour. Okay. So management should allocate the fixed overhead cost to the unit produced at a rate of 20 paisa per hour. Clear? Is that clear? What is my fixed production overhead allocation? 6,500 units multiplied by 20 paisa per hour, 1,300. The remaining fixed overhead incurred during the year, 1,500 minus 1,300, 200 will be charged to P&L. The amount of fixed overhead allocated to inventory is not increased as a result of low production by using normal capacity to allocate fixed overhead. Okay. This is the abnormal loss, inefficiency. Variable production overhead absorption rate is 40 paisa per hour, 2,600 divided by 6,500. Management should allocate variable overhead cost to unit produced at a rate of 40 paisa per hour. The above rate results in the allocation of all variable overheads to units produced during the year. What is my closing inventory? Opening plus produced minus sold, which is 2,300 unit. Up to this level, we are all clear, right? We have already discussed. Okay. As each unit has taken 1 hour to produce, total fixed and variable production overhead recognized as a part of the cost of inventory is equal to number of units of closing inventory multiply by number of hour to produce each unit multiply by fixed production overhead plus variable production overhead absorption rate. So 2,300 unit multiply by 1 hour plus multiply by 60 paisa, 1,380 rupees. So the remaining 1,500, which is your fixed production overhead, 2,600, which is your variable production overhead, minus 1,380, which is the value of the closing stock, right? So the remaining 2,720 is recognized as an expense in the income statement as follows, right? Absorption in the cost of goods sold, 6,500 minus 2,300 is equal to 4,200 multiplied by 60 paisa. Okay. So you understand from where this 6,500 minus 2,300 has come? You understand this? 6,500 was the actual production, right? And 2,300 is the closing stock. So what is my cost of goods sold? 4,200 multiplied by 60 paisa, right? And unabsorbed fixed overhead, which is 200 rupees, right? That will also charge to P&L. So total P&L charge will be 2,720. Total P&L charge will be 2,720. ये क्लियर हुआ आप लोगों को? 4,200. ये क्लियर है? 4,200.
Clear है sir.
क्लियर है? Okay, very good. Friends, just allow me a break for 2 minutes, right? Just allow me a break of 2 minutes. It's 8:05. I'll start at 8:08. Mom is saying that, sir, it is not clear that, how this 4,200 has come. Shubham. So the question is saying that while computing the cost of closing inventory, what you have to do? You have to apply the FIFO formula. FIFO formula, right? First in, first out. So what is my closing? What is the cost during the year? Fixed plus variable. Priyanka, what is the cost per unit? Fixed plus variable. 60 paisa? 60 paisa is per unit cost. Since we have opted for the FIFO model, so what is meant by FIFO model? Means whatever is the opening inventory, it has been sold out. First in, first out. Which comes first, goes first. Okay. It means the inventory of how much is the closing inventory? 2,300 units. So this 2,300 units belongs to the current year production, right? And what is my production cost? What is my production cost? My production cost is 2,300 units multiplied by 60 paisa. That is what, right? 1,380, right? So, and what is my current production? My current production is 6,500, and I am assuming this 2,300 belongs to my current year production only. This is left out of current year production. So that is why 6,500 is the current year production minus 2,300 is the closing inventory. So multiply by 60 paisa is comes out at the amount which is going to be charged to the P&L. Okay. Okay. As a cost of goods sold. And the fixed production overhead 200 is like an in abnormal inefficiency, it will charge to the P&L immediately. Yes. So let me discuss question number 4. Question number 4. On 1st January 2001, an entity accepted an order for 7,000 custom-made corporate gifts. Okay. 7,000 custom-made corporate gifts means on the request of the customer. Okay, customized on the request of customer. And this is what is the unit? Unit is 7,000. On 3rd January, the entity purchased raw material to be consumed in the production process for 5,50,000, including 50,000 refundable purchase taxes. What is the conclusion of this line? What is the conclusion of this 1.5 line?
Raw material cost will be 4,50,000. 5 lakh minus 50,000.
The raw material.
5,50,000 minus 50,000 because they are refundable and included in the cost.
Yes. So it means it is refundable. It means it is not a cost to the company, and hence 5 lakh rupees the cost of raw material. Okay. Very good. Then the purchase price was funded by raising a loan of 5,55,000, including 5,000 rupees of loan raising fees. The loan is secured by the inventories. And this purchase price, this inventory was purchased and by taking a loan from the bank, okay. This inventory was purchased by taking a loan from the bank. So now the question comes, whether this interest cost and the loan raising fee. So the question is silent about the interest cost, but the question is talking about the 5,000 rupees of loan raising fees, whether this will become part of the cost of the inventory.
No, sir.
And how have
It
you
is
concluded no?
No.
because it is a financing cost and not a cost that is necessary to make the inventory.
Very good. So nicely replied. I was expecting this answer only. So while concluding whether this cost will be included or not, so there are 3 parameters of cost. Number 1, cost of purchase. Is it a cost of purchase? No. Number 2, cost of conversion. Is it a cost of conversion? This 5,000 rupees.
No.
No. Number 3, directly attributable cost which is necessary to bringing the inventory into the location and condition for becoming it sellable. Is it a directly attributable cost?
No, sir.
No. So it means this cost will not form part of the cost of the inventory. Okay. Okay. This cost will not become part of the cost of the inventory. Very good. Nicely replied. During January 2001, the entity designed the corporate gift for the customer. Design cost included. Cost of external designers 7,000 rupees and labor 3,000 rupees. Whether this will become the cost?
Yes, sir.
Yes, sir.
Yes, sir.
Product designer cost, product designing, because it is a customized product, and of course designing is important. So the cost of designer and labor, this 10,000 rupees will become cost of the product. This will become the production overhead, right? This will become the production overhead. Very good.
Yes, sir.
During February 2001, the entity's production team developed the manufacturing technique and made further modification necessary to bring the inventories to the condition specified in the agreement. Okay. The following costs were incurred in the testing phase. During February, The entity production team developed the manufacturing technique and made further modification necessary to bring the inventory to the condition specified in the agreement. The following costs were incurred in the testing phase. Material 21,000 rupees, labor 11,000, depreciation of plant used to perform the modification 5,000 rupees. Whether this will be covered?
Yes, sir.
Yes. Yes or no?
Yes, sir.
Yes, sir.
Why? Why it will be covered?
Because it is given that it is necessary to bring the inventories to the condition.
Yes, you're right. It is given that it is necessary to bring the inventory to the condition specified in the agreement, and that is why this entity has to incur material, labor, and this depreciation cost. Okay. So 21 plus 5, 26 plus 11, 37,000 rupees has to be become part of the inventory cost. Okay. During February, the entity incurred following additional cost in manufacturing the customized corporate gifts: consumable stores, labor, depreciation. 55, 65, 15. What about these costs?
They will be included.
They will be included. The customized corporate gifts were ready for sale on 1st March 2001. No abnormal wastage occurred in the development and manufacture of the corporate gifts. Right? Compute the cost of the inventory. Substantiate or answer with appropriate reasons and calculation wherever required. So we have done with this thing. So now let's discuss quickly. So the cost of purchase, 5 lakh rupees. This is a non-refundable purchase taxes and hence excluded. Loan raising fee 0. Cost of purchase, conversion, production overhead. This production overhead design, external design and labor cost, right? And this 37,000 is, you remember, the testing phase cost. And this borrowing cost will not form part of the cost of the inventory. It will charge to P&L. So this will be your inventory cost. Is this question clear to everyone? This will become your inventory cost. Is this question clear to everyone?
Yes, sir.
Yeah?
Yes.
Yes. Very good. Now let's come to question number 6. Question number 6. B Limited has valued stock held for distribution as free item on claim by customer on offers at 0. B Limited has valued its stock held for distribution as free item on claim by customers at 0. मतलब B Limited के पास कोई स्टॉक पड़ा हुआ है which is held for distribution as free item. Okay. If the customer claims, so B Limited will distribute as a free, okay, at 0, and it valued at 0. The customer have a right to claim the free item within 14 days from the date of the invoice. If the time limit of the 14 day exceeds, the claim is foregone by the customer. Okay. The majority of the free item requires online registration by the buyers for participation in the contest conducted by the respective brand, which needs to be done by the buyers within 3 days from the date of invoice. For example, let's say you went to Louis Philippi to purchase a shirt. Okay. So Ravi went to Louis Philippi to purchase a shirt. And Louis Philippi is also, they are also keeping hanky, right? Rumal. hanky as their product, as an inventory. So whenever a customer buy a product from Louis Philippi, so he has a right to get the hanky free of cost. But before that, he has to do a registration on the app, right? He has to open an application, he has to do the registration, and that registration has to be done within 3 days from the date of invoice. Okay. When the registration will happen, so within 14 days, the customer can reach out to the store and the customer can get the free hanky. Okay. Out of it, a few items under this category were found damaged. The replacement cost of such item would be rupees 2,50,000. Determine whether the inventory has to book loss of inventory or provide for replacement cost of the goods that need to be given as free item to customer as per the principle of Ind AS. Okay. As per principle of Ind AS. Tell me what should be the right answer. Just think about for 20 seconds.
We will give an assumption, sir.
Which is what assumption?
That assuming that they have they have registered for that.
Okay.
So then we will recognize this 2,50,000 using this assumption.
Okay. So first of all, whether any loss is required to be booked for this inventory. What is the value of the inventory? What is the value of this inventory?
0.
0. तो 0 ही अगर वैल्यू है लॉस हो गया तो क्या क्या रिकॉग्नाइज करोगे? Yeah. So friends, Ind AS 2 deals with write-off in value of inventory. The stock of free item is valued at 0 by the company. The question of loss of inventory does not arise as a claim of free stock is subject to various conditions like 14 days, online registration, which are all contingent in nature. But a provision can be recognized when entity has an obligation, outflow is probable, and reliable estimate can be made. If these conditions are met, a provision can be recognized. Here, provision is to made for goods to be distributed because sales took place in the reporting year, and assuming that registration for the contest are received, whereby there is a high probability that the customer can claim the free item within 14 days from the date of invoice. Further, a reliable estimate of the claim can be made. Hence, provision of 2,50,000 is to be made for the reporting year financial statement, not the impairment loss of inventory. Rather, a provision is required. Further, on expiry of the time period where claim had not been made by the customer, reversal of provision will be done in the next financial year. Okay. So inventory itself is lying at 0. So what loss you will recognize? But since this 2,50,000 is the item which got damaged, right? So the loss provision is required as per Ind AS 37. Okay.
Sir, provision is, credit. It's a liability. Then what will be the debit?
Debit is expense. Debit is expense.
Okay.
But not an expense in the nature of inventory write-off. It's a normal expense.
Okay.
It's an abnormal loss.
Okay.
Right. Is that clear?
Yes,
Is
sir.
that clear, my dear friends?
Yes, sir.
So friends, we have completed this inventory standard, and out of the 6 questions given by Board of Studies of ICAI, we have covered 5 questions completely. So now friends, it's 8:25 now. Let's have a 10 minutes break and we will start at 8:35. And we will start with the new standard, which is agriculture, Ind AS 41, right? Let's meet at 8:35. Okay.
सर एक बार स्टार्टिंग का 5 मिनट्स का बता देंगे.
So, Shweta, we have covered that, this inventory standard covers 3 kind of inventory, which is held for sale in the ordinary course of business, which is finished goods, work in progress, and raw material. Then we discussed, the inventory there are two part of inventory, which is primary packaging material and secondary packaging material. So primary packaging material will always form part of the cost of the inventory, but the secondary packaging material will not be the inventory. It could be PP, it could be any other standard, right? Then we discussed inventory has to be measured at cost. Cost includes cost of purchase, right? Cost of purchase plus non-refundable taxes, plus transportation cost, plus directly attributable cost, plus cost of conversion like variable overhead, labor, etc., etc., plus any other cost like storage cost, which is necessary to bringing the inventory in the location and condition to become it sellable, right? So then we discussed that the inventory has to be measured at the end of the reporting period. It has to be measured at cost or NRV, whichever is lower. What is NRV? NRV is equal to estimated selling price minus estimated cost of completion minus estimated cost to sell. Okay. So this was the things which we have discussed in the first 10-15 minutes. Right. So guys, it's 8 Student, I hope my PPT is visible. So students, this standard Ind AS 41 is agriculture related standard, right? So prior to Ind AS, we don't have such kind of standard in accounting standards, right? We don't have such kind of standards. So this Ind AS 41 agriculture, it deals with what? It deals with what? Animal and plant. It deals with biological asset. What is meant by biological asset? Biological asset is a living animal or plant. It's a living animal or plant. Okay.
Livestock.
Livestock. So this deals with biological asset, deals with animal and plant. So my question to all of you is, let's say there is a circus company, event management company. They have purchased some animals, and this circus company has purchased some animal for the purpose of entertaining the audience. Now the question is whether such biological assets, whether such livestock, right, such animals will be covered under Ind AS 41?
No, sir.
Why?
Because it is not being used for agricultural activity.
So basically it is not used for agricultural activity, right? Those animals are not used for agricultural activity, okay? Those animals are used for the entertaining the audience, right? And hence, it is not covered under Ind AS 41 biological asset definition. It will be covered under Ind AS 16 property, plant and equipment. So friends, this standard covers the definition, few definition like biological asset. Then we'll discuss recognition criteria. So there are 3 items in this standard. Number 1, agriculture produce. You understand the meaning of agriculture produce? For example, mangoes on the mango tree, right? So what are the mangoes? Mangoes are the agriculture produce of the mango tree. What is mango tree? Mango tree is a biological asset. It's a living animal or plant. While there is a concept of bearer plant also. So those plants, those trees, which provides the agriculture produce for more than 1 year will be considered as a property, plant and equipment, right? But those plant which are seasonal plant, which provides fruits and vegetables, which provides the agriculture produce only within a year is considered as what? Within a year is considered as biological asset, okay, under Ind AS 41. So in this standard, we will be covering 3 aspects: agriculture produce up to the point of harvest, then biological asset, then government grant related to agricultural activity, right? We discuss those 3 aspects. We discuss the recognition condition, measurement, how the gains and losses will be treated, and then we'll discuss the government grant. So these are the 3-4 aspects in this particular standard. In my detailed video on Ind AS 41, I have covered one practical example, real life example from the annual report as well, right? So this standard is applicable. This standard is applicable on 3 items. Biological asset. This standard is applicable on those 3 items when they relate to agricultural activity. When they relate to agricultural activity, right? So biological asset. Agriculture produce at the point of harvest. What does it mean? Agriculture produce at the point of harvest. What does it mean? Anyone who wants to attempt? Priyanka, Shweta, Anushi, anyone who wants to attempt? Or probably Praveen, Salesh, Ravi.
Sir, it refers only to those products which are directly consumable after harvesting and not converted into some other form. For example, apple can be an agricultural produce, but if we make some juice from apple, then it won't be covered in agricultural produce.
No, it is not a right answer. So basically, this is a tree, for example. This tree has lot of fruits, okay? Like this is an apple tree. So when these apples are lying on the tree, it is not agriculture produce, right? So this will become an agriculture produce when it is harvested. So at the point of harvest, when you are plucking, when you are detaching the apple from the apple tree, it is known as a point of harvest. When you plucking the apple from apple tree, it is known as the point of harvest, right? So agriculture produce, which is the outcome of that tree, outcome of that plant, the fruit and vegetable, the agriculture produce at the point of harvest will be covered under this standard. For example, there is a wine company, okay, wine company, let's say Biba, not Biba, Bira is a wine company. It's a liquor company. So they have plucked the grapes, right? So they have a grapes orchard. They pluck the 1,000 kg of grapes. So when they are plucking the grapes from the grape plant, right, at the point of harvest, this agriculture produce at the point of harvest, right, this will be treated as per Ind AS 41. Okay. And after harvesting, they will use the grapes for the manufacturing of wine, for manufacturing of liquor, right? So then after harvesting, it will transfer to the inventory as a raw material after harvesting. Okay. So this standard covers the agriculture produce at the point of harvest also. And the government grant, while there is a separate standard on government grant, which is Ind AS 20, but this standard covers only those government grant which are related to the agricultural activity, right? And agricultural activity does not mean only plantation. It also includes horticulture, floriculture, aquaculture, right? Let's say chicken farming, milking. So all these activities are also covered under agricultural activity. Okay. So these three items will be covered under Ind AS 41. Biological asset when it is related to. So biological asset when it is related to what? When it is related to agricultural activity. For example, the cow and buffaloes are used for agricultural activity when it is used for milking, right? But if the cows are used for, let's say, transportation of goods and services, it is not covered under Ind AS 41. So Ind AS 41 is not applicable to land, bearer plant, government grant related to bearer plant, intangible asset related to agricultural activity, and right of use asset. If the company has taken a land on lease and doing the agriculture, so on the land, the Ind AS 41 is not applicable. Agriculture produce after harvest, once you have harvested the product, once you have harvested the fruits and vegetables, so after that Ind AS 41 is not applicable. After that Ind AS 2 or other standard will be applicable. Okay. This is the biological asset entire, life cycle. I mean to say from this standard perspective. So biological asset includes living animal. Okay. And it also includes plant. So all those biological asset which is related to agricultural activity is covered under this standard. But for plant, if it is a bearer plant, means which provide agriculture produce for more than 1 year, it will be covered under Ind AS 16. If it is a non-bearer plant, means which provides goods and services within 1 year, which provides fruits and vegetables within 1 year, seasonal, it will be covered under Ind AS 41, like potato, tomato, carrot. So this will be covered under Ind AS 41. Okay. Recognition condition. So for recognizing a biological asset and agriculture produce up to the point of harvest, right? So there are three recognition conditions. First condition, future economic benefits should be probable. Second condition, fair value oblique cost can be measured reliably. See, in this standard, so normally in PP, intangible asset, only cost can be measured reliably was the condition. But in this standard, fair value oblique cost can be measured reliably. Fair value aspect has also been included. Why? Why? बताओ why? नहीं पता?
फर्दर सेल करना है सर, इसलिए
सॉरी,
फर्दर सेल करना है सर इसको।
बिकॉज क्या करना है?
सेल सेल करना है फर्दर।
सेल करना है. Okay. You know the kind of the item which this standard is dealing with. Not necessarily every time you have a cost. For example, the company has harvested, the company has plucked 1,000 kg of apple from the apple tree, right? And this company is engaged into the manufacturing of, let's say, apple juice. Okay. So tell me, from these apples, whether future economic benefit is probable?
Yes.
Yes, of course, yes. The company will use this as a raw material, manufacture the finished goods, which is apple juice, and sell it to the market. It is an important raw material. Do you know the cost of these apples?
No.
It can be measured.
How it can be measured?
So we know the price
What?
in the market. In the market. Sir.
No, so you know the price in the market, but that price is not the cost. That price is the fair value, market value, right? So probably, you will not be able to measure the cost of 1,000 kg of apple. You will not say that, my cost of harvesting, let's say, my gardening cost, my gardener cost, watering cost. So that will be minuscule in terms of this apple production. That will be minuscule. Okay. So you will not be able to demonstrate that what is the cost of the apple per kg, right? Probably the per kg apple cost is 100 rupees per kg, but the cost which comes out it is 2 rupees per kg. So there are two companies. One, the company has its own apple orchard. That second company which is purchasing this apple as a raw material, right? So that the results will be comparable of the different companies in the same industry. Standard says that if the fair value can be also measured reliably, right, you can recognize that biological asset or agriculture produce up to the point of harvest. So because of these kind of item, the word fair value has also been used. And the third condition, entity control the asset. So control must be there. Entity control the asset. Control must be there. For example, and why this third part is important? Let's say there's a street dog, who is always sitting at the gate of a company, right? And the company is giving milk and bread to the dog, and the dog ensure that no trespasser will enter into the company's premises. Now tell me whether future economic benefit is probable from the dog. The dog is providing like a security service. Yes, future economic benefit is probable. So even the property, plant and equipment which is used for the security purpose, like fire extinguisher, which will react only when some mishappening will happen, right? So those assets are also considered as a property, plant and equipment. The dog is providing the security service, okay, in terms of the service which he is providing. So whether you know the cost of the dog.
No.
Street dog hai. But you can get the fair value, market value of the dog, right? If you go to the veterinary market, somebody can see the breed of the dog and somebody can tell what is the fair value of the dog, the market value of the dog, right? So future economic benefit is probable. The fair value, market value is also measured reliably. But are you controlling the dog? Which means
No, sir.
if tomorrow
No, sir.
municipality when will come and they will catch all the street dogs, will you be able to stop them? No.
No.
you will not be able to stop him. It means you are not controlling the dog, and hence that dog being a biological asset will not be covered in Ind AS 41, will not be recognized as a biological asset, right? So friends, three condition: future economic benefits should be probable, fair value or cost can be measured reliably, and entity should control the cost. Okay, entity should control the cost. Now, all these biological assets, okay, and the agriculture produce up to the point of harvest has to be measured initially and subsequently. Biological asset has to be measured initially and subsequently at fair value less cost to sell. Biological asset initially and subsequently has to be measured at fair value less cost to sell. What is meant by initially and what is meant by subsequently? Initially means on the transaction date. Subsequently means on the
Reporting date.
reporting date. On the reporting date, right? What is the initial measurement of agriculture produce at the point of harvest? It is also measured at fair value less cost to sell. What is the subsequent measurement of agriculture produce after harvest?
Inventory.
It will become part of inventory, right? So let me show you my Excel file and let me explain this quickly, okay? So Ind AS 41, as I told you, there is no standard on agriculture in accounting standard. In IFRS, it is IAS 41, and in Ind AS, it is Ind AS 41. Okay? So Ind AS 41 is applicable on three aspects: biological asset, agriculture produce at the point of harvest, and not after harvest, not before harvest, at the point of harvest, and government grant when related to agricultural activity, right? Ind AS 41 not applies to bearer plant, which provides produce for more than 1 year, which provide agriculture produce for more than 1 year, like mango tree, apple tree, coconut tree, rubber tree, tea tree, coffee tree, etc. However, Ind AS 41 applies to the agriculture produce of those bearer plant, for example, mango, apple, rubber, tea leaves, coffee leaves, etc. Let's say Nestle India Limited is a company, okay, and they have a mango orchard. They have a mango orchard. This mango tree is a bearer plant covered under Ind AS 16, and mangoes are the agriculture produce covered under Ind AS 41. On 19 November, the company has plugged 100 kg of mangoes. So mangoes are agriculture produce. It will cover under Ind AS 41. The fair value per kg of mango is 50 rupees because the cost cannot be measured reliably. But fair value, market value is known. So fair value is 50 rupee per kg, cost to sell is 5 rupee per kg. Fair value less cost to sell is 45 rupees per kg. Okay. Now this company is using the raw material, mango as a raw material. So what is the first entry on 19th November? The first entry is agriculture produced mango account debit to other income, 4500, which is 45 multiplied by 100. Okay. Being agriculture produce recognized as per Ind AS 41. What is the next entry? Immediately, this agriculture produce will be transferred to inventory. This company will manufacture jam, sauces, chutney, pickles, soft drink, etc. So agriculture produce will become inventory for this company, right? So what is the second entry? The second entry is inventory account debit to agriculture produce account. On 31st March, this agriculture produce will become inventory. On 31st March, Ind AS 2 will be applicable. So you have to apply the cost or NRV, whichever is lower, and how this is the subsequent measurement of this agriculture produce. It is not as per Ind AS 41, it is as per Ind AS 2 inventory standard. Okay. Is this clear? Is this clear, friends?
Yes, sir.
Yes, sir.
Okay. Biological asset. So biological asset has to be measured initially and subsequently at fair value, less cost to sell. Okay. And how the gains and losses will be treated, let me tell you. Example, biological asset. With this example, we will cover the entire accounting life cycle of the biological asset. On 1st July 2021, the company has acquired a cow. Cow is a biological asset. So this biological asset has to be measured at fair value less cost to sell. Okay. What is the market value of the cow? What is the market value of the cow?
10,000 here.
10,000. The price at which this company has acquired a cow from the market, 10,000 rupees. Assuming cost to sell is 1,000 rupees. Assuming. So what is my fair value less cost to sell? 9,000 rupees. 9,000.
Yes.
So when the company, in case of purchase of biological asset, when the company will do the initial measurement on 1st July 2021, it has to be initially measured at fair value less cost to sell. So what is the accounting entry? Biological asset account debit at fair value less cost to sell, 9,000 rupees. To cash account, 10,000 rupees. Because the company has paid cash of 10,000 rupees. So where the difference 1,000 will go? The difference 1,000 will go to loss on initial recognition. Right? So this standard says that doesn't matter if you purchase the cow or if the cow has given birth to a calf. Doesn't matter. You have to measure initially and subsequently at fair value less cost to sell. So in this case, the fair value less cost to sell is lower than the amount which is paid by the company. And why it is lower? Because of the element of cost to sell. What would have been the cost to sell? Right? Any doubt in this entry? Any doubt? Any question up to this entry? Any question?
No, sir. No, sir.
So initially on 1st July 21, it is measured at fair value less cost to sell, right? And the difference 1,000 is going to P&L. On 31st March 22, on the reporting date, the fair value less cost to sell become 9,500. It become 9,500. So what happened now? It increased by 500. So what is the accounting entry? Biological asset account debit to other income. Okay. So biological asset debit to other income. So the credit goes to other income. Okay. So now the cow has given birth to a calf. Is there any cost which is reliably measured for the calf? Can you measure the cost of the calf? Answer is no. So you have to apply fair value less cost to sell. So the standard says that on biological asset, you have to apply fair value less cost to sell for initial measurement as well as for subsequent measurement, right? For initial measurement as well as for subsequent measurement. So assuming the fair value less cost to sell of the calf is 1,000 rupees. So what is the accounting entry? Biological asset calf account debit to other income 1,000 rupees. For example, the calf got died. The calf got died. And that is the end of life of the biological asset. What is the accounting entry?
Same reversal of the above entry.
So loss on derecognition to biological asset. And if the residual of the calf is sold to the slaughterhouse, for example, for 200 rupees, what is the accounting entry?
Cash debit to other income.
Cash debit 200 rupees. Okay. 2. Biological asset calf 1,000 rupees. Loss on derecognition 800 rupees. Okay. Clear?
Yes, sir.
Right. So this was the concept of biological asset and agriculture produce up to the point of harvest. Now, friends, I'll discuss the government grant later on. Before that, let's discuss some questions.
सर ये जो कॉस्ट टू सेल है उसका मतलब क्या है? ये जो बायोलॉजिकल एसेट में था
कॉस्ट
10,000
टू सेल
माइनस
का मतलब होता है कि if you would have to sell in the market, what would have been the selling cost? For example, let's say you purchase this cow at 10,000 rupees. And if you will go to the market and sell the cow, you have to incur some selling brokerage, selling commission, selling cost, right? So that has to be reduced from the fair value. Okay. to measure the fair value less cost to sell.
Okay, understood, sir.
Yes. So let me share the Word file where these questions are given. Just a minute. I hope the Excel file is visible.
Yes, sir.
Entity A purchased a cattle at an auction on 30th June 20x1. Purchase price at 30th June is 1 lakh rupee. Cost of transporting the cattle back to the entity's farm is 1000 rupees. Sale price of the cattle as at 31st March 2002 is 1,10,000 rupees. The company would have to incur similar transportation cost if it were to sell the cattle at auction, in addition to the auctioneer's fees of 2% of sale price. The auctioneer charges 2% of the sale price from both the buyer as well as the seller. Calculate the amount at which cattle is required to be recognized in the books on initial recognition and at the year end 31st March 2002. So the corresponding journal entries also. Good questions. Good question. Tell me the answer.
One lakh less 3,000. 97,000.
So on the initial recognition at the time of 30th June, you have to measure this cattle at fair value less cost to sell. What is the market value? What is the purchase price? 1 lakh rupee. 1 lakh rupee is the purchase price. But if you have to sell this cattle, you have to incur a transportation cost. वो तभी लगेगी जब आप बेचने जाओगे. Yes? It is a directly attributable cost. It is a incremental cost to sell the cattle. So 1000 rupee is the cost to sell, which is for transportation. The second cost, auctioneer charges. And this auctioneer fee is from both the buyer and the seller. So it means it is also cost to sell. And this fee will be applicable only when you are going for the sale. Okay. So 1 lakh minus 3,000. 97,000 is the fair value less cost to sell. 97,000. But what is the amount which you have paid? What is the amount which you have paid? आपने अमाउंट कितना पे किया है?
1 lakh.
1 lakh 3,000.
So 1 lakh is the purchase price. And in the question it is given the cost of transportation from market to the entity's farm 1,000. And the question also talks about that the auctioneer fee is payable both from the buyer and the seller side. The question is also talking about that. So you have recognized the cattle, biological asset cattle account debit at 97,000 rupees. To cash, to bank, 1 lakh 3,000 rupees. Purchase cost and transportation and auctioneer charges. Right? Right? So where the 6,000 will go? Where the differential 6,000 will go?
Loss.
Loss?
Yes, sir. Loss on recognition.
Loss on initial recognition. Okay. So you have recognized the cattle at 97,000 rupees. Now, at the reporting date, the value of the cattle become 1 lakh 10,000 rupees. Yes. So what is the amount at which the cattle is going to be measured on the reporting date? It is again fair value less cost to sell. किस वैल्यू पे होगा?
1,06,800.
And how have you arrived at 1,06,800?
Sir, 1,10,000 minus 2% minus 1,000.
Can you please repeat again?
So 1,10,000 minus 2% of 1,10,000 minus 1,000.
Very good. So 1,10,000 minus cost of transportation minus auctioneer charges, which is 2% of the sale price, okay, which is 2,200. So 1,10,000 minus 1,000 minus 2,200, okay. So which comes out at, Shweta, it is not only 110 minus 1, it is 110 minus 1 minus 2% of 110,000 also, right? So it comes out at 1,06,800. And now when you compare this 1,06,800 with 97,000, what is the difference? The difference will go to 9,800, will go to biological asset capital account debit to gain on remeasurement to other income, 9,800. So these are the accounting entry. Is this entry clear to everyone? The amount and the entry
Clear
is
in mind,
to
sir.
everyone? Yeah. Clear in mind? Yes or no?
Yes, sir.
Very good. So now let me discuss question number. Question number 4. Let me discuss question number 4. On 1st November 20x1, C Agro Limited purchased 100 goats of a special breed from a market for rupees 10 lakh with a transaction cost of 2%. Goats fair value decreased from 10 lakh to 9 lakh as on 31st March 20x2. Okay. Determine the fair value on the date of purchase and as on financial year ended 31st March 20x2 under both the cases. So this company purchased 100 goats of a special breed from a market for 10 lakh with a transaction cost of 2%. And the fair value decreased from 10 to 9 lakh on 31st March. Determine the fair value on the date of purchase and as on financial year end, this under both the cases. The transaction costs are borne by the seller and the transaction costs are incurred by the seller and buyer both. Also pass journal entries under both the situation on the above dates. Friends, I am taking a 30-second pause and I want you to solve this answer immediately. Solve this question immediately, right? Just think 30 seconds and let me know the answer quickly. Yes, what is the answer? Anyone who is able to give the answer? Anyone? So, what is the price? 10 lakh rupee. What is the transaction cost? 2%. 2% of 10 lakh is
20,000.
20,000, right? So first of all, let's discuss the accounting entry and the value on the date of measurement, on the date of initial measurement. So assuming the transaction cost is borne by the seller, right? 2%. So what is my fair value? 10 lakh rupee. What is my cost to sell if I will become the seller? Because I need to measure at fair value less cost to sell. Okay. So what is my fair value less cost to sell? 9
9
lakh
lakh 80.
80,000. 9 lakh 80,000. Okay. And what is the price I have paid? What is the price I have paid?
10 lakhs.
10 lakh. So what is the accounting entry?
Biological asset account debit.
Biological
9
asset
lakh.
account debit 980. To
Loss
bank
on
10 lakh.
initial
To bank 10 lakh. And then the difference will go to loss on initial recognition. 20,000. Right? So if this cost is incurred by the buyer and seller both, then what is the initial measurement?
Then also initial measurement will be at 9,80,000
वो तो
only.
980 पे ही होगा, right?
And to bank it will be loss on this initial recognition will be 40,000.
Yes. So if this transaction cost is incurred by seller and buyer both, means buyer is also required to pay additional 20,000 rupees. So biological asset will always be at fair value less cost to sell. So biological asset account debit 980 to bank 1020. The 40,000 will be go to the P&L as a loss on initial recognition. Right. So now this 10 lakh become 9 lakh. So what is the accounting entry in case of the first scenario when the transaction cost is borne by the seller? When it become 9 lakh, what is my fair value less cost to sell? So 9 lakh minus 2% of 9 lakh, which is 18,000.
8,82,000.
So what is 9 lakh minus 18,000? 8 lakh 82,000. At what value I have recognized my biological asset? 980. So 980 minus 882. What is the amount?
98,000.
98,000. 98,000. Okay. 98,000. So loss on fair valuation 98,000 to biological asset. Simple, right? So because this is a loss, so biological asset will be credited and the loss will be debited. Is that clear? Yes,
Sir,
Abrakesh.
Sir, in case of first option, when the transaction cost is to be borne by seller in question, why we are assuming that this is also to be included for our books when we are only purchaser? We are purchasing the goods, no?
So you are right. You are purchasing the
To get
goods.
the fair value. To get the
But
fair value.
at what value you are going to measure these goods in your books of accounts at the time of initial measurement?
No, that's what I am asking. Why we are assuming that this when we are purchaser, why we should include the 20,000 effect of in 20,000 in first option. Second option is okay. When we are purchaser, why we should treat we ourselves as a seller also?
No, so why? So as per you, Abrakesh, why the second option is okay? If you are the purchaser, then as per you, it has to be measured at cost. अगर ये पीपी होता तो आप क्या करते? 10 लाख रुपए का आपने पीपी खरीदा प्लस आपने उसमें 2% का कॉस्ट और इनकर किया. Let's say on the purchase of PP. So then your cost will be 1020, not 980. तब तो 1020 होता. The cost is 1020. The bank account in the second option, the bank credit is 1020, not 980.
No, sir, that is fine. What I am asking is in first option, when it has been mentioned that the transaction cost to be borne by seller.
Yes. So let me answer your question. So I'll answer your question in two parts. Number one, the standard says that all the biological asset has to be initially measured and subsequently measured at fair value less cost to sell. right? Standard says that. Fair value less cost to sell. Number two, when you assume fair value less cost to sell, when you compute fair value less cost to sell, you have to step into the shoes of a seller.
Okay, got it. Got it.
Means if you were to sell the asset, what is the selling price? Means market value minus what is your cost to sell as a seller. Okay. Yeah. So that is why we have measured this biological asset at the selling price, which is market value, which is 10 lakh rupee minus 20,980. And this 980 is consistent in both the option because it is fair value less cost to sell. Right. But the only change comes out when the purchaser is also incurring some additional cost. Then that additional cost will also charge to P&L. Okay. Clear?
Yes, sir.
And subsequent measurement happens again at fair value less cost to sell. So again, fair value less cost to sell. Fair value is 9 lakh. What is my cost to sell? 2% of 9 lakh, 8 lakh 82,000. So I have initially measured my biological asset at 980. Now it become 882. So where 98,000 loss will go? Again, this loss will go to P&L. So loss account debit, loss on fair valuation of biological asset debit to biological asset. Right? Clear? Is that clear?
Yes, sir.
Okay. Yes. Analyze question number 5. Analyze whether the following activities fall within the scope of Ind AS 41 with proper reasoning. Managing animal related recreational activity like zoo, whether it will fall under the agricultural activity. Answer is no. Managing a zoo is not agricultural activity. It is for the entertainment of the audience. Since the primary purpose is to show the animals to public for recreational purposes, there is no management of biological transformation, but simply control of the number of animals, right? Hence, it will not fall in the purview of considered in the definition of agricultural activity. Fishing in the ocean. Fishing in the ocean is also not covered under agricultural activity. It is fishing in ocean is harvesting biological asset from unmanaged sources, right? There is no management of biological transformation since fish grow naturally in the ocean. Hence, it will not fall in the scope of definition of the biological asset, agricultural activity. But let's say there is a fish farming. The company has developed a pond, and in the pond, the company is doing the fish farming, fish breeding. Whether that fish farming cover under agricultural activity?
Yes.
Yes.
Yes, because the company is managing the biological transformation, the growth of the biological asset. Yes. So managing the growth of the fish and then harvest for sale is agricultural activity within the scope of Ind AS 41. Since there is management of biological transformation of biological asset for sale or additional biological asset. Okay. Development of living organism such as cells, bacteria and viruses. Is it agricultural activity? Development of living organisms such as cells, bacteria, viruses, etc. So the development of living organism for research purpose does not qualify as agricultural activity, as those organisms are being developed for sale or for conversion into agriculture produce or into additional biological asset. Hence, development of such organism for the said purpose does not fall under the scope of Ind AS 41. However, if the organisms are being developed for sale or use in the dairy products, you remember in our childhood we heard that for converting from milk to curd, for formation of a curd from milk, it required two kind of bacteria, lactobacillus, and there were names of the two bacteria. Do you know the name of those two bacteria? which is converting from milk to curd?
एक्चुअली हम लोग मिल्क में दही डाल देते तो हो जाता है कर्ड.
Sorry?
आई डोंट नो अबाउट द बैक्टीरिया नेम बट नॉर्मली वी हम लोग दही डाल देते दूध में तो दूध दही हो जाता है फिर.
हो जाता है, बट उसको कन्वर्ट करने के लिए एक बैक्टीरिया यूज होता है, राइट? सो अपने आप ही बैक्टीरिया डेवलप होता है. सो इफ दोज काइंड ऑफ सेल्स, बैक्टीरिया, वायरसेस is used for converting into, dairy or dairy products, so those kind of bacteria or viruses, if you're developing, so those can be covered under agricultural activity. Growing of plant to be used in the production of drugs means medicine, yes, it will be covered under agricultural activity. Purchase of 25 dogs for security purpose, whether it will be agricultural activity.
No.
It is Ind AS 16 APP. It is not the agricultural activity. Okay, not the agricultural activity. Yes. So let's discuss question number 6. ABC Limited is in the business of manufacturing an apple beverage and require large quantity of apple to manufacture such beverages. Sorry. It, in order to satisfy its requirement of apples, it enters into 3-year lease contracts. It enters into 3-year lease contract with owner of apple orchard. The lease contract are mainly of 2 types. Contract number 1, the owner of the apple orchard, which is lessor, he raises the apple tree to produce apples. ABC, who is lessee, makes a fixed annual payment to the owner of the apple orchard, who is required to cultivate the produce as per the specification of ABC Limited. ABC Limited harvests the apple itself for fulfilling its requirement of apples, right? That is contract number 1. So this company ABC is in the business of manufacturing and selling apple beverages, and it requires large quantity of apple to manufacture such beverages. In order to satisfy the requirement of apple, this company enters into 3-year lease contract with the owner of apple orchard, right? And this lease contract are mainly of 2 types. Number 1, the owner will raise the apple tree and the lessee will cut the apples, okay, cultivate the apples, right? Contract number 2, the lessee will obtain the apple orchard from the owner to raise the apple tree for subsequent harvest of the apples, okay, to ensure that the apples are as per the requirement of the ABC Limited, okay, and ABC Limited makes a fixed annual payment to the owner of the apple orchard. So the second contract says that ABC, the lessee, is only taking the farm, the land on the lease. ABC himself is raising the apple tree and himself is cultivating the apple also. Explain whether ABC Limited is engaged in agricultural activity as per Ind AS 41 in both the cases. बताओ, इन दोनों ही केसेस में क्या ABC Limited एग्रीकल्चरल एक्टिविटी में एंटर हो रही है या नहीं हो रही है? So friends, if I talk about the definition of agriculture and agricultural activity, so agriculture defines agricultural activity and biological transformation, right? So what is the agricultural activity? Agricultural activity is the management by the entity of the biological transformation and harvest of the biological asset for sale or for conversion into agricultural produce or into additional biological asset. What is the definition? एग्रीकल्चरल एक्टिविटी की डेफिनेशन क्या है? द डेफिनेशन इज agricultural activity is the management by an entity of biological transformation. Biological transformation means growth, degeneration, recreation, okay, and harvest of the biological asset. So biological transformation and harvest of the biological asset for sale or for conversion into agriculture produce or into additional biological asset. This is the definition of agricultural activity. Biological transformation comprises the process of growth, degeneration, production, procreation, which causes qualitative or quantitative changes in the biological asset. Right? As per contract number 1, during 3 years of contract, ABC Limited only harvest apple from the apple orchard, whereas biological transformation is managed by the owner of the apple orchard. So when he grow the seed, when the plant was growing, when the plant was able, the tree was able to provide the fruits. So this entire things are managed by the lessor, not this entire biological transformation is not managed by the lessee. Okay. Since ABC Limited is not involved in the biological transformation of the apple orchard and is only harvesting the biological asset, which is apple, it cannot be said to be an agricultural activity as per Ind AS 41. Hence, ABC is not engaged in the agricultural activity. But what about the contract number 2? What about contract number 2?
Agricultural activity.
Why?
Because ABC Limited itself managing the all things related to agricultural activity.
So this ABC Limited is managing the biological transformation. Okay. He is managing the apple right from the seed to, he is managing the apple tree right from putting the seed to when this apple tree is able to, grow the apples. So this is managing the biological transformation, and hence in the second case, this will become the agricultural activity. Okay. So we covered this question also, question number 5, question number 6, now question number 4. Right. Now let's discuss question number 2. Detailed question. XY Limited is a farming entity where cows are milked on a daily basis. XY Limited is a farming entity where cows are milked on a daily basis. Sorry. Can you please keep on mute, Prashant? Okay. XY Limited is a farming entity where cows are milked on a daily basis. Milk is kept in cold storage immediately after milking and sold to retail distributors on a weekly basis. On 1st April 20X1, XY Limited had a herd. Herd means jhund, collection. Had a herd of 500 cows, which were all 3 years old. कितनी काव है इनके पास? 500. और एज क्या है काव की?
3 years old.
3 years old on 1st April 2001. Okay. During the year, some of the cows become sick. And on 30th September, 20 cows died. क्या हुआ? कुछ काव बीमार हो गई on 30th September after 6 months, and 20 cows died. On 1st October 20X1, next day, XY Limited purchased 20 replacement cows from the market for 21,000 rupees each. अब क्या हुआ? 20 काउ जैसे मरी, ये जो कंपनी है, ये कंपनी 20 नई काउ और खरीद के ले आई. और इन काउ की मार्केट वैल्यू क्या है? फेयर वैल्यू क्या है काउ की? द फेयर वैल्यू इज
21,000 each.
21,000 rupees each. These 20 cows were all 1 year old when they were purchased. और इनकी एज क्या है काउ की?
1 year old.
1 year old. और 30th सितंबर पे या 1st अक्टूबर पे जब ये काउ परचेज हुई, तब तक वो पुरानी वाली काउ कितने साल की हो गई होंगी? व्हाट वाज द एज ऑफ दोस काउज एज ऑन 1st अक्टूबर और 30th सितंबर?
3.5 years.
3.5 years, yes. It becomes 3.5 years. You're right, Sweta. You're right. It is 3.5 years. So on 31st March 20X2, XY Limited had 1000 liter of milk in cold storage on the reporting date, which had not been sold to the retail distributor. The closing inventory is given. The closing inventory of milk is given. The market price of the milk at 31st March was 20 rupees per liter. The market price is also given. When selling the milk to the distributor, XY Limited incurs a cost of 1 rupees per liter. What is the relevance of this 20 rupee and 1 rupee?
Uh, Fair value minus cost to sell. 19.
And this will become an inventory. So when this become an inventory, it becomes indexed to cost or NRV, whichever is lower. So what is my NRV here? 20 rupee is the market price minus estimated cost of sale, which is 1 rupee. 90 rupee per liter is the value of the inventory. Okay. These amount did not change during March 2002 and are not expected to change during April 2002. Information relating to fair value and cost to sell is given below. अब कुछ और इंफॉर्मेशन दी है. Fair value of cow. Fair value of cow. And this fair value of cow is given for 1 year old cow, for 1.5 year, 3 year, and 4 year. What is the relevance of this 4 year, 3 year, 1 year, and 1.5 year? So why the fair value is given for all these 4 buckets? Why the fair value is given for all these 4 buckets?
For different date of recognition we need, because one cow, certain cows grows and their fair value will be increased for subsequent measurement.
Sorry. Yes. So because the cow which was purchased, it was 1 year old, it become 1.5 year, right? So the cow which was 3 year old, it become 4 year. Okay. It become 4 year. Okay. So that is why the cow which was purchased was 1 year, it become 1.5 year on the reporting date. The cow which was 3 year old, it become 4 year on the reporting date. So the fair value is given for all the date, 1st April, 1st October, 31st March, right? And the cost to sale of a cow is also given. So this information is given for fair value less cost to sale. Okay. The fair value of 3.5-year-old cow on 1st October 20X1 is 27,000. Pass necessary journal entries of above transaction with respect to cows in the financial statement of XY Limited for the year ended 31st March 20X2, which is reporting date. Also show the amount lying in the inventory, if any. Okay, if any. Clear? Is that clear, friends? So, friends, first of all, let's start with the question. So, in the question, if you will see, on 1st April, this company has not purchased these 500 cows. They have the opening balance, right? They have the opening balance on the 1st April. And this opening balance is at the rate of 27,000, of course. Okay. So now the first event happened on 30th September. And on 30th September, 20 cows died. So what is the accounting entry for the death of this cow? Loss on derecognition account debit to biological asset. Loss on derecognition to biological asset. 20 cows. And what is the value of these 20 cows? What are the values of these 20 cows? इन 20 काउ की वैल्यू क्या होगी जब इनकी डेथ हुई? हमने ओपनिंग वैल्यू 1 अप्रैल को 3 साल, ये काउ 3 साल की थी 1 अप्रैल को. व्हाट वाज द वैल्यू ऑफ दीज काउस? 27,000 per cow. So 1 अप्रैल को ये काउ किस वैल्यू पे आ रही होंगी? आई मीन टू से on 1 अप्रैल what was the opening balance of these cows? इसमें लिखा है ना 27,000. 27,000 is the value as on 1 April 2001, right? And cost to sell of a cow is 1,000. So what is my fair value less cost to sell? आप फेयर वैल्यू लेस कॉस्ट टू सेल पे रिकॉग्नाइज करते हो ना?
26,000.
26,000. So what is the value of 20 cows?
5,20,000.
5,20,000. So loss on derecognition account debit to biological asset 5,20,000. On 1st October you purchased 20 cows. What was the value at which you purchased? 21,000 was the market value, and 21,000 is the market value of on 1st October you purchased the cows at 21,000. Cost to sell is 1,000. So what is the value of this cow? Fair value less cost to sell. 21 minus 1, 20. So 20 cows multiply by 20. 4 lakh. Biological asset account debit 4 lakh. To bank. How much you have paid? You have paid 4,20,000. So 20,000 is the loss on initial recognition. Is that clear? Is that clear? Yeah. ये क्लियर है ना?
Yes, sir.
अब क्या होगा? अब आपका 1 अक्टूबर को लॉस ऑन मेजरमेंट ऑफ ओल्ड काउस. 1 अक्टूबर को वो जो पुरानी काउस थी वो कितनी बची हैं? 500 काउस थी ना पुरानी, उसमें से कितनी काउ बची हैं? 480. बिकॉज 20 काउस गॉट डाइड. और 1 अक्टूबर को ये जो 3 साल वाली काउ थी इनकी वैल्यू क्या हो गई होगी? जो 3 साल वाली
3.5 year. 3.5 year.
3.5 year. So the fair value of 3.5 year cow is also given 27,000. The fair value of 3.5 year cow is given, right? So 500 multiply by, so on 30th September, on 1st October, the values are given. So on 1st October, if you see on the 1st April, 500 cows were there. Fair value was 27,000. Cost to sell was 1,000. Net value is 26,000. So total cost is 1 crore 30 lakh. 1 crore 30 lakh, right? So 1 crore 30 lakh minus 5 lakh 20,000 minus 12192. How this 12192 came? How this 12192 came? ये कहां से आया वैल्यू? 1 अक्टूबर को वैल्यू कैसे निकालेंगे? मेरी 480 काउ की वैल्यू कितनी होगी 1 अप्रैल पे? सिंपल ये बताओ. What is the value of my 480 cows? 480 multiply by 26,000. 26,000 होगा, कितना होगा? इसमें दिया है ना 3 साल, वो काउ 3 साल की थी ना?
Sir, it will be 25,400 multiplied by 480.
Why 25,400?
Because now the 3 years cow will be converted into 4 years. So their value is given 26,500 and cost to sell is 1,100. So subtract karke we will get 25,400.
Okay.
We'll multiply this 25,400 with 480. We will get the value at present date.
Yes.
And initial value we will get. We recognize biological asset at 1,30,000. Sorry, 1 crore 30 lakhs, out of which we de-recognized 5,20,000 because 20 cows died. So their value will be 1 crore 24 lakh 80,000.
Okay.
From this amount, we will reduce 1 crore 21 lakh 92,000, and we will get 22 lakh 88,000.
Very good. Yes. So this table will clear everything. You are right. So this table will clear everything. On 1st April, we had 500 cows, right? The age was 3 years. Fair value was 27,000. Cost to sell is 1,000. 26,000 is the net value. So my initial opening balance of the cow was 1 crore 30 lakh. On 30th September, 20 cows died. And the value of those cows was, of course, 26,000. So 5,20,000 is the de-recognition value. On 1st October, 20 cow was purchased for 21,000, but cost to sell is 1,000. So fair value less cost to sell at which the new cow was recognized is 20,000. So 20 multiplied by 20,000 comes out at 4 lakh. Okay. On 31st March 20x2, we have only 480 cows. We have only 480 cows. And these cows become 4-year-old. And the value of the 4-year-old cow on 31st March 20x2 is 26,500. Is 26,500, this one. And cost to sell is 1,100. So this comes out at 25,400. Okay. And the value is 12192,000. On 31st March 20x2, this 1-year cow which was purchased becomes 1.5-year-old. And 1.5-year-old cow value as on 31st March 20x2 is 23,500. And the 1,100 is my cost to sell. 22,400 is my fair value less cost to sell. This comes at 4,48,000. So 126,40,000. 1 crore 26 lakh 40,000 is the value of my closing stock. Is the value of my closing stock. Closing stock of cows, right? And 12880 was the value of the old cow plus new cow. So old minus died plus new. So 12880 and 12640. What is the difference? Difference क्या है दोनों में? कितना difference है दोनों में?
2.4.
2.4. So 12640 and so 26 2,40,000.
2,40,000.
So out of 2,40,000 आप इसमें से कितना लॉस रिकॉग्नाइज कर चुके हो? आपने जो ओल्ड काउस का कितना लॉस आप रिकॉग्नाइज कर चुके हो? 520. आपने कितना लॉस रिकॉग्नाइज किया है? So let me solve this question on the Excel file, right? Because this question has a lot of lengthy calculation. Shall I solve this on Excel file? Yeah. Can you see the Excel file? Question number 2. Okay. Cows. 1st April 2001. What is the fair value? What is the quantity of the cow?
500.
500. I'll split this 500 into 2 parts, 480 and 20. Can I do that? Can I do this? Yeah. Fair value less cost to sell. What is the fair value less cost to sell? On 1st April 2001, what is the fair value less cost to sell? The fair value less cost to sell is 26,000. What is the age of these cows? 3 years. Okay. 3 years. What is the opening value? The opening value of quantity 480, quantity 20. What is the opening value? 480 multiplied by 26,000 and 20 multiplied by 26,000. Please help me if I am doing the right calculation. सही है calculation मेरी अभी तक? Is this calculation right? Yes? Yes or no? ठीक है calculation? Now on 30th September. 30th September. I have done nothing. On 30th September, what have happened? 30 सितंबर को क्या हुआ? ये काउ मर गई, right? These 20 cows have died on 30th September. These 20 cows have died. Okay. So when these 20 cows have died, okay, what is the value of these cows? Opening balance कितना था इन cows का? 520 का था. तो क्या होगा? तो क्या होगा? ये -20 हो जाएगा, right? और क्या वैल्यू थी? Value was 26,000. So what should I do? I should de-recognize these cows. This will become a loss to me. This will become a loss. Yes? Is that right? ये सही है ना? और जब काऊ की डेथ हुई तो वो 3.5 इयर्स की थी, बट वो 3.5 इयर्स का आपको कुछ नहीं करना. आप उसकी दोबारा फेयर वैल्यू करोगे, दोबारा डी रिकॉग्नाइज करोगे, तो उसका कोई लॉजिक नहीं है. करेक्ट? यहां तक कोई डाउट? इज देयर एनी डाउट अप टू दिस लेवल? न्यू काउस. When new cows have purchased, can you help me please? When new cow have purchased? 1st October. 1st October 2001. And how many new cows have purchased? How many new cows have purchased?
20.
20. New cows 20. And what is the fair value less cost to sell on 1st October 2001? What is the fair value less cost to sell on 1st October 2001? When the cow was purchased?
20,000.
20,000 is the fair value. 20,000. And let me write the purchase cost also, right? Purchase cost. What was my purchase cost? 21,000. Purchase cost was 20,000 and fair value less cost to sell is 20,000. Okay. Is that clear? And what is the age of these cows? 1 year old. Now coming to the 31st March. March 2002. What happened on 31st March 2002? And let me write this 31st March 2002 at this place. 31st March 2002, 31st March 2002, 31st March 2002. Okay. So, and before that, let me put the accounting entry for these cows. Let's say, yes. What is the accounting entry for the death of the cow? What is the accounting entry for death of the cow? On death of cows. क्या accounting entry होगी? Loss on derecognition account debit to biological asset. What is the amount? Amount क्या है?
5,20,000.
5,20,000, right? This is the amount of biological asset. On purchase of new cows, what is the accounting entry on purchase of new cows? क्या अकाउंटिंग एंट्री होगी परचेज ऑफ काउस की?
Biological asset account debit 4 lakhs.
Debit.
Loss on partial recognition 20,000. To
Yes.
bank 4,20,000.
Biological asset account debit by 20,000 multiply by 20, right?
24.
20,000 is the fair value, 20 is the quantity. 2. Bank. Bank will be created by 20 multiplied by 21,000 is the purchase cost. Right? And the rest goes to loss on initial measurement, initial recognition. Okay. What is the loss? 420 minus 4 is the loss. 20,000, right? So we did this accounting. Now, on 31st March 2002, what is the balance cows? What is the balance of this cow? So closing quantity. What is the closing quantity out of this lot? Out of the opening lot, what is the closing quantity? 480. इसमें से कुछ बचा? ये काउ तो खत्म हो गई. Anything left here? Anything left here? No. कुछ नहीं बचा ना? 0. Anything from this? 20. Right? What is the age of these cows? What is the age of these cows on this date? 31st March 2, it becomes 4 years old. Age in years. It become 4-year-old. This is 0. This is 1.5-year-old. What is the fair value? What is the fair value? Less cost to sell. Can you help me with the fair value less cost to sell? Yeah? Can you help me with the fair value less cost to sell?
25,400.
25,400 for how much years old? So for 4-year-old it is 25,400. For 1.5 year 22,400. So 25,400 and this is 22,400. Yes. So now what is my fair value less cost to sell of these cows? What is my fair value less cost to sell of these cows? 25,400 multiplied by 480, right? सही है? And this is 22,400 multiplied by 20, right? So what is my gain or loss? What is my gain or loss? On 31st March, the closing value is 121,92. What was the opening value of 480? 2,88,000, right? So this is the loss. What is my value of this cow? 448 minus. At what value I have recognized? At what value I have recognized? I have recognized at 4 lakh rupee, right? 4 lakh पे recognize किया था ना मैंने? 4 lakh पे किया था. तो 48,000 का क्या होगा? 48,000 का gain होगा. Is that calculation clear to everyone? Is this calculation clear to everyone?
Yes, sir.
Is this clear to everyone? Whether this accounting is clear to everyone? Yes? समझ आया? Now it is crystal clear. Okay. And what about the value of the inventory? Inventory has to be valued at what value? 20 minus 1, 19. 19 multiplied by the 1000 liter. 19,000 is the value of the inventory. 19,000 is the value of the inventory. Okay. So friends, this was the questions on Ind AS 41, which we have discussed as a revisionary questions, right? Anything which you want to discuss on Ind AS 41? Anything which is not clear to all of you? So let me know if you want to discuss anything on Ind AS 41. Friends, regarding the government grant, if the government grant is only related to agricultural activity, then only it is covered under Ind AS 41, otherwise not, right? When there's a reasonable assurance that the condition will be completed and the grant will be received, then only grant will be recognized as an income. Okay. Anything else, my dear friends? If not, should I conclude the session? All clear, Salesh? Okay. Okay, friends, if you don't have any questions, so let me conclude the session. Thank you so much. Have a good day. And tomorrow we will be covering Ind AS 105, non-current asset held for sale and discontinued operations. Thank you so much. Bye-bye. Take care. Session is over. Yeah.